What's up, guys? It's Brian from Hashware Hub, and today is December 17th at about 10:06 Eastern Time, and we're going to be reviewing Cardano. So hit that subscribe button, hit the notification bell so you have all of our information directly coming to you. We'll also be reviewing Cardano on a daily basis through its correction or continual rise. So definitely hit that subscribe button and notification bell so you get all of our information with regards to how to go about trading this and keeping your profits. That's what this is all about, right? Keeping your profits. So yeah, we're looking at the daily chart right here. This is an application that we utilize. I've been trading on Wall Street for I guess well over a decade now, about 15 years. And so we utilize all sorts of different types of tools, and this is one of the tools that we use. It's an AI trading platform. We also use TradingView like a lot of other people do too, but these are some proprietary signals or algorithms that we've created over time that you see by these various different color lines. So we'll be going over that too, about what they mean. And so let's get right into it right here. So Cardano on a tear. I think today it's been about 30% up, in the previous day, and who knows how much it was up. It was up a lot. Let's say 60% or 50%. And even the previous days were huge days up. Anybody would kill for those types of performances. Our algorithms showed us to kind of get in right here. Now, algorithms take a lot of information. So, for example, you see this one and this one right here. This is the trend strength, and this is the D trend. Take a lot of information, take a lot of data before they get moving. Same thing with MACD. You could see it right here. It didn't start until about, let's say, October 31st. So, but these algorithms here, they don't utilize as much data. So we got a signal here, and we didn't take it. We took something more along these lines right here, where another one of our algorithms uses this blue line right here, which indicates a few different things. That blue line, just for educational purposes right here, I'll go through it. The blue line is for three purposes. A, it identifies low risk entries. B, it identifies when the market is going to turn, price reversals. And the third reason is for protective stops. It shows you where to put your stop losses in. So that's, the blue line is super powerful, and everything in combination is powerful. So the way we look at it, everything, nothing in isolation. We look at it in order to create a story for us. No indicator in isolation is going to do a great job. You need to look at everything as a story, as it paints a picture. So that's the way we go about things. So yeah, so the market shot up here, and what we're going to do is we're going to analyze this, not if you bought here or here, okay, if you bought it like around here. Because if you bought at these tops right here, no matter what indicator you use, you're getting into a very risky position. You know, you're really just trying to go with the flow type of thing. Our strategy always is to kind of buy on that pullback, buying that low risk position. We want to hit singles. We're not looking to hit home runs. So I'd rather the market run away from me, and I didn't get into it because it wasn't a low enough risk trade for me. I'm totally cool with just sitting on cash. It's not a problem with me. So instead of making a bad trade and then not being able to sleep or kicking yourself because of it, because you make a bad trade, you have a large loss. Now it takes a bunch of good trades to go ahead and cover that large loss. It doesn't jive with me. So so the blue line, you could put a protective stop here at 25 cents. That wouldn't even be all that conservative because of the fact that the market is so much higher. You can even put something up here, but when the market kind of runs up like this, it could kind of shoot down and then kind of come back up again. So if you don't want to be super conservative, you could go ahead and put it down here. Now, what we like to do is, in these types of instances, and if you're familiar with our videos, you'll see that we say this all the time. When the market runs up like this, you remove a portion of your position. You remove a portion of your position, and then if you want, when the market comes back down, you buy it back at a lower risk position, because nobody can pick a top. If you're going to think you can pick a top or a bottom, you're out of your mind. I've never seen anybody be able to do it, and I know a lot of freaking genius traders that are amazing. They could trade anything, and they could trade an acorn market if there's such a thing existed. So you can't call a top, you can't call a bottom. So let's say, for example, even if we thought yesterday was the big day and it was, there wasn't going to go any higher from there, if you sold it out here, you're still in a great, or a portion of your position out here, you're still in a great position. You still did freaking amazing. It's about low risk entry, right? So if you bought over here, or you bought over here at a low risk entry, getting out at 40 cents when you bought it, let's say, for example, at worst, at let's say 10 cents or 12 cents, I mean, it's almost 4 times your money. Who's going to scoff at 4 times your money in like 2 weeks' time? So it's great. So what we would do, like I said, is we would sell some of it right here and look to purchase it back right here. If the market were to come down here, okay, let's say we were wrong. Let's say you sold some here, the market were to come down here, you purchased more, and then it came down to 15 cents, and you said, you know something, I want to get out of it. Well, that portion of your position that you bought here, you sold it here. So you didn't take this whole loss from here to here. You didn't take this whole loss from 51 cents to 25 cents. Analysts trying to pick the top. Fools. They're all fools. You're just doing it for headlines. If you saw the little blurb on the bottom corner there. So, yeah. So you didn't you the position you got out of didn't fall in value from here to here, right? You sold some here. So you're protecting a major portion of the profits of your trade. It's a no-brainer. We do it all the time, especially now how everything is popping off like popcorn left and right. It makes perfect sense to go about doing it that way in order to protect your profits. Because if you protect your profit today, you want a profitable position. You have a profitable position, you then could take that profit and put it into the next trade. You don't want to have a losing position. No matter what you do, you don't want to have a losing position. And you don't want to be greedy about it, saying, oh, I want that last 3 cents or 5 cents or 10 cents or whatever it is, because you know something, you're eventually going to get slaughtered if you act like a pig about it. So that's what we got going on here. So this is the trend strength indicator. When it goes from low to high, it shows it's bullish. So this made us feel very comfortable about it right here. Right here, this little dip right here, we didn't really get all too concerned at all. Reason being is because there's not a lot of data just yet on this for our indicators. So, and our blue line was super strong and the market looked super healthy. So we just thought this was a little blip. Still, anyway, this is not, when the trend strength indicator comes down like this, it's not an immediate sell by any means. So the D trend here, the D trend was coming down. Again, there wasn't a lot of data just yet, so we didn't really look so intently on this indicator either. So now here is where we started looking at it a bit more. When it was going sideways and the market was going sideways, that's a healthy thing. That's what we want to see. The market started shooting up and the D-trend indicator was shooting up. What we like to use the trend indicator for is when there's a divergence. Let's say, for example, the market's going up and the trend indicator is moving down. It's almost always an indication that something underneath in the foundation of the market, the foundation of the pricing, that eventually there's going to be a correction. More times than not, that tends to be the case. MACD, we use MACD really not all too much. We kind of almost utilize that as a further confirmation for the other indicators that I had mentioned before, but it's nice to see that MACD is in it's reaching for the stars. It's in a huge buy position. It crossed over right around here. So, that's kind of our 2 cents here on Cardano. We will, like I said, we will be putting it in the mix for our daily recaps of what's going on. We will also be showing you guys how we go about trading the correction, if there is a correction, or if there's a continual price extension from here. We're also going to show you how we go about trading that and managing that, protecting those profits. So, like I said earlier in the video, if you like what we have to say, you totally hit that subscribe button, hit the notification bell, leave us any questions in the comments below, or feel free to email us or send us bat signals or homing pigeons or smoke signals, whichever way you'd like to communicate to us. It's always great to see, because it keeps us going on doing these analyses. We do these analyses anyway for ourselves, but to go ahead and put the videos together, it does take some time and some effort. So it's always great to see that you guys are finding some value out of it. Anyway, speak soon. Happy trading.